The agenda.
Adoption. Brendan gives us adoption, all in favor? That's carried, thank you. Motion for close,
I'll give you that.
Brendan gives us that, all in favor? And I saw Cindy, good, all right, and we are closed.
Let's do it. We are returning to our August 1st, 24th special council meeting to deal with the auditor's report. We went in camera at 4:31 and we just came out of camera at 4:51. And we are going to reconvene and we'll move on to motions arising from close. We have none. We have adoption of minutes of the July 17th, 2024 regular council meeting. Can I get a motion for that, please? John gives us that. Thank you. All in favor, Heather? No. There you go. And we have Heather and Cindy online as well. Go 5B. Auditor findings report, auditor financial statements year 2023 presented by MNP LLP. Alrighty, Mr. Davey, the floor is yours.
Thanks, Worship. I'll turn the floor back over to.
And it's there. It doesn't hurt.
Yeah,
It's for that online. Yeah. Just a little bit clearer. It's not that you're not loud enough. It's just clarity.
It doesn't mean.
Yeah.
Yeah. It doesn't melt down on you.
Anyway, if it does, yes.
Okay, we're not.
There you go.
Okay.
I'll talk about it.
Theater.
Okay, so yes, thank you, council, for having me, and I appreciate it. And as well for introducing me. So we're gonna go through two documents today. First document will be the 2023 findings report to council. Second document will be your actual financial statements. So I'll start off with the findings here. Can you scroll up to page 1? Which inside? Oh, other way. Okay, so and one page is not. So the introduction section essentially says this is our report to the council members for the results of our audit for Diamond Valley for December 31st, 2023. Purpose of the audit finding is to assist you kind of summarize the information from our audit. If you recall, there would have been an audit service plan issued with the council back in January that essentially outlined what we intended to do with our audit. And this kind of just says, okay, this is what we intended to do. Try to do the plan, what happened with that plan, how it's so our engagement status is essentially everything's complete for the audit of the town. There's two things left to do, which is I need a signed representation letter from management. Have him sign off for this meeting. Appreciate that. Essentially, the signed management representation letter just states that as management, he takes responsibility for all the information given to us, and that it's full as complete as it possibly be. And then lastly, council's review and approval of the statements here today. So our independent audit report is expected to be released today, August 1st, 2024. This year, we'll be providing what's called a qualified opinion. So this might be for some before you might see an unqualified opinion. So essentially, a qualified opinion just means that there is something about our opinion state that we can say for certain everything's into our non-legitimate stated. And the only reason we have a qualified opinion, I've discussed this in my last time I was with council, is the financial statements when it comes to them, because we're not adhering to the asset retirement obligation standard as required by public sector accounting standards right now. So we're not adhering to that right now because due to the obligation, we can figure out some issues and essentially spend it. So aside from that, that's the only reason we have a qualified opinion. Aside from that, you have essentially statements that we believe are to present fairly in all material respects. Any questions on that? No. Am I talking loud enough for the people on the camera or the computer?
Yeah, you're good.
Okay. Okay, you can scroll down now to the next page. Okay, so let's tackle this section first, which is our audit reporting matters. So as I mentioned before, we would have distributed an audit service plan to you back in January, which essentially outlined what our intended procedures were for the plan. So when we do an audit service plan, we look at a set of financial statements, we say, what are the significant risk sections, what are the lower risk sections, and what are the middle risk sections? We assign this risk factor for our audit procedures, determine what those procedures are, and we go and do them and report back to council. Sometimes we have to deviate from that plan due to potential issues or potential extra procedures that we might have to do. So what this section describes is essentially the areas where we have to change our procedures. And does not necessarily mean that we change them entirely and perform them. It means we have to add additional procedures. So for the following sections, essentially, we added additional procedures where we work with management to determine the proper amounts that should be outstanding, should be owing, should be carried forward, or should be showing in reserves. I've summarized it before, because we accounts receivable, accounts payable, for revenues and reserves. So we sat with management and figured out exactly what those numbers should be. Once we were able to figure out what those numbers should be at December 31st, 2023, then we performed our regular audit procedures that we would have, and that were in the audit service. Any questions? Okay, go to the next page. So the next page, a couple pages are going to take us through significant areas that we must communicate to council. So the first area is so there is inherent limitations in these types of audit. This is what's called a forensic audit, where we're looking at every single transaction that goes through your ledger. It's called a financial statement audit, which means that materiality is based and we perform procedures on that materiality. So while our audit cannot be relied to detect a fraud, it can be relied on detect fraud. While we're doing our procedures and while we're working through the audit, we're obviously aware and cognizant and trying to make sure that we keep it out. So no incidents of fraud or suspected fraud came to our attention during the course of the audit, which is good. Same thing with compliance with laws and regulations. Nothing has came to our attention that any non-compliance with laws and regulations. Well, no significant matters arose with any significant parties in the town. And then significant deficiencies in internal controls. So our audit process focuses on understanding the controls and walking through them from a cradle to grave perspective. So we start at the start of the transaction, all the way into financial statements. And during that process, we'll see if there's any controls that need potential improvement or some areas we see for efficiency. So what we'll do is we'll prepare a letter to management and we'll send that to them to essentially help them hopefully correct some deficiencies or non-efficiencies that we see. So that's a copy of the management there. Next page. This one is any significant matters from discussions with management. So first of all, we'd like to formally acknowledge the cooperation since we received from management and staff of the town. It was great to work with them. They were very open to work with us and solving the issues that we had this year. So over the course of the audit discussions, the only significant thing that we need to bring to your attention is management is aware that right now we're not in compliance with that asset retirement obligation standard, that there needs to be work done to figure out what those obligations are. And as a result, they are aware that that may result qualified opinion by your financial statements. We'll go through what looks like. Last two sections. So the first section we talked about is significant differences, aka adjustments that were made from the initial trial balance that we received to the ending trial balance that we end up with that end up in the statements. So several significant adjustments were proposed and also accepted by management with respect to December 31st, 2023 financial statements. We will go through this at a high level, kind of the appendices. And then the last section is just materiality. So I mentioned how our audit is not a forensic audit. We don't look at every single transaction that can be in our ledger. We use materiality as a concept to essentially drive it all. So that concept is we say at what point, if something was misstated, would council or a user of the financial statements, be it a citizen and management council, make a different decision. So we're not going to build that road. We're not going to build that bridge. We're not going to raise taxes. We're going to lower taxes, whatever that might be. Standard percentage that we apply for this is 5%. So that's pretty standard across the board for all municipalities. Now that results when your gross revenue is 14 million, that results in 700,000. So I'm sure we're all sitting here and going, wow, 700,000, that's a pretty big number, especially for all of us individually. Have to remember that is on $14 million in gross revenue. So it is a smaller number. And then further that, whatever section that we deem more significant or more significantly risky, we'll scope that materiality number down. So we'll essentially lower our allowance for issues essentially. And those significant sections are what's important. So revenue, deferred revenue, taxes, receivables. So those significant sections, we take that $700,000 and we're going to scope it down. And we scope it in units of 25. So sometimes we scope it down to 75%. Sometimes we scope it down 50%, and sometimes we scope it down 75%. So we can get very small depending on what section of the audit that we're working with. So while 700,000 seems like a big number, just remember that's not what actually ends up happening when we're doing our testing in the financial statements. Any questions on any of that? Alrighty. Okay, we'll scroll down a little further. So in terms of significant accounting policies and disclosures within your financial statements, with the exception of the ARO standard, we believe that all the accounting policies are in alliance with public sector accounting standards, and all your financial statement disclosures are in alliance with public sector accounting standards and what Alberta expects you to disclose within your financial statements. I've already talked about the management representation letter that we're going to receive, and then lastly, as auditors, we always confirm our independence, so we are independent. This one's kind of a new one for us, but essentially it's audit metrics. So it just gives a quick breakdown. So average time for audit request response is 1 to 2 days. And the staff was very responsive, always engaging with us. It was really good to work with them. We had an initial trial balance provided to us on March 11th, and then the final trial balance that we worked off was given May 22nd. We had 8 adjustments provided by management throughout the process. There was 15 adjustments suggested by us. There was additional procedures like we already talked about for deferred revenue, accounts receivable, accounts payable, reserves. And then there's also 6 unadjusted. So it's differences that we potentially noted that could be a difference, but more work had to be done to be certain if something should be adjusted. So due to materiality, we left them and did not adjust them. So we'll go through those details on one of the appendices. Scroll down. I'll skip this entirely. This is a great way to fall asleep if you want to read our audit process, as well as our required communication requirements with council. But if you ever need some sleep, I suggest reading those. You can go to Appendix C. So Appendix C are the significant risk areas. So these are the risk areas, like I said, this is the risk areas will scope down by essentially 75%. Right? So what we look at is management override controls. So we'll do review the general ledger, review journal entry testing, review accounting estimates, review rationale behind significant transactions that are not in the normal course of business. So essentially, in this section, we're looking more for, is there any override of controls that are being caused due to the risk of fraud? And no material issues were noted with respect to this. There was some override, or there was some controls, as we mentioned, control improvements that we can make, but there was no intentional override of controls that we sought due to fraud. Page. Asset retirement obligation. I'm sure you're sick of me saying that, so I'm just going to say, as discussed, we're leaving that off the board this year. We also look at government transfers in detail. So we did reconciliation and adjustments, and no material issues were noted there. Deferred revenue and restricted contributions. So these will be contributions that potentially need to be carried forward for one reason or another due to money not being spent in the year, or perhaps they were being saved for a specific purpose. So after reconciliation and adjustment, material issues were noted. And then, of course, the other higher risk areas with tangible capital assets and reserves. Sorry, with tangible capital assets and reserves, no material issues were noted with tangible capital assets. And then after reconciliation and adjustments, no material issues were noted with reserves. Okay. Adjustments. So this is the summary of significant differences, or think of it as adjustments made. So we talked about when we got the initial trial balance on March 11th, the final trial balance. So the trial balance is essentially raw data that gets put into your financial statements. So we talked about when we received that, it was written May 22nd, and the adjustments that we made. And this is the cumulative effect of all those adjustments. So think of it from a perspective of balance sheet, so your statement of financial position, or earnings, so it hits net income. So either net income went up or it went down depending on the adjustments we made. So this summarizes them in brief What I try to do was keep it to the gross section that it was. So for example, the first line is the aid adjusting entries provided by management during the course of our audit. It affected accounts receivable, accounts payable, capital assets, revenue, expenses, and it resulted in a net decrease in income of 172,000. So this is anything from amortization on your capital assets to write-offs of potential AR to write-offs of potential AP, etc. And then I've kind of just tried to break it down by section. So our adjustments for accounts receivable, for uncollectible amounts, our adjustments for lands held for sale off the balance sheet, our adjustments for prepaid expenses, our adjustments for surplus effects, so your equity and tangible capital assets. So some of these you'll notice will not have an effect on the earnings column, and that's because there's only a balance sheet effect. That's all that means, is that essentially we're changing two accounts in the balance sheet. Adjustments to your deferred revenues, so that is revenue that's being carried forward to the following year, be it capital grant, donation, or monies received that we're carrying forward for a specific purpose. And then adjustment for debt payments as well, so you can see that cumulative effect there. And then an offsite levies adjustment. So the total net income effect from when we first received the raw data to what you see in your financial statements, we've adjusted down your net income by 288,000. Okay. So then we have what's called our significant unadjusted differences. So these are differences that we believe more information needs to be sought. And that more information essentially is we determine either if something's actually collectible, if we've already collected it, potentially we're still just trying to figure that out, or if potentially we have made a payment on something. So you can see it looks like a large number, but there's only one real potential adjustment that's affecting that number. And for those of you from Turner Valley, remember this, there was an outstanding amount regarding the flood recovery grant that there was some debate going on with the government on whether or not they're going to pay it. As of last year's audit, there was certainty that it was going to get paid. And I think with the amalgamation and everything that has happened, that might have just fallen by the wayside in terms of collecting that payment. Or perhaps it has been paid and we just haven't actually put it against that amount owing. So once you take that out, you'll see that the actual net effect is only about $3,000. But that one I wanted to just highlight because that's essentially the big one affecting.
And that's a significantly aged receivable. Is that number?
From the government with respect to what?
Yeah.
And from my history with Turner Valley, that number was higher and we did collect some of it in 21 and 22, and the remaining payment was supposed to happen. And we're not sure. I'm assuming it probably just fell by the wayside with the automation and just followed up on, but it's once again something that we. So that's why we didn't adjust it, because we don't want to write it off if you're collect. If okay, that's the first one. Any questions on that one? I went through it kind of quick.
Brendan, did you want to just get some clarity on that 288 was its first slide? Just roll up one. So just right there, 288.31.
Yeah.
Yeah, that was from the previous page. Is it, brackets is a positive, correct? No, negative.
Yes.
Okay, that's what I was asking. Yeah.
Yeah.
So we're down 288.
And then we're down 169 again, 100%.
Yeah, with 166 of that being hopefully the flood.
Exactly.
Yeah,
We'll
okay.
see.
So this one was just cumulative. That's what it's cumulative. That was just a whole bunch of nice small things that you found. Just add them up. There's your 288.
Exactly. That is the net effect.
Right.
Yes.
This is all the amalgamated effects of just finding your kibbles and bits as it were.
Exactly. So from the raw data that we received at the start to what you see in the financial statements, essentially, if you were to compare the two, that's the cumulative effect that adjusted.
Excellent. All right, let's roll again.
Okay, there is some appendices on this, but we can just switch to financial statement because the appendices are essentially pieces of financial statements. So. Perfect. Okay, so I'm moving on to your financial statements now. So the first page essentially is that management sign off I was discussing, where we need that sign off of management. Essentially, they provided us the best information that they could. They worked with us through the audit to give us everything fully and complete as best as possible. So that's that first page. The The second page is going to be your independent auditor's report. And so as discussed, we have a qualified opinion this year. And you'll see in there, we have our basis for a qualified opinion, which essentially summarizes that because we're not in compliance with the ARO standard, we are able to determine what the obligation was. You're technically going to have a qualified opinion on the statements. Aside from that, everything else looks good on the financial statements in all material and fair respects. We do have an extra paragraph in there this year for emphasis and matter, and this is due to the amalgamation. So this is just saying that the comparatives, so your 2022 columns in these financial statements, what they are showing essentially is the effect of adding the two towns together, while also recognizing that they sometimes have transactions with each other. Those transactions should be netted together and should be shown on a gross basis. So that's what that paragraph essentially is saying. Further within our audit report, we discussed the responsibilities of management and those charged with governance. So obviously, management is responsible for preparation and fair presentation of the information within financial statements. These governance are responsible for ensuring management does their duty. Keep scrolling down. We have our auditor's responsibility. So our responsibility as auditors is to obtain reasonable assurance within your financial statements to assure that they're free from material misstatement, whether due to fraud or error. We do that by identifying and assessing the risk of material misstatement, obtaining an understanding of internal control, evaluating the appropriateness of accounting policies, concluding on said appropriateness, and then finally expressing your opinion to yourself, the town, which we've done. So we've expressed our qualified opinion, which municipalities have this fun little thing at the bottom that essentially says there's two other legal and regulatory requirements, which is that we disclose the town's debt limit and also disclose any payments to assets. So those are in the notes, and you can see that they're in note 9 and note 14. Any question on the audit report? It's a big one this year.
Cindy or Heather, we'll go to you guys first.
I'm good.
I'm good.
All right, thank you.
Okay, so let's touch on the statement of financial position, aka balance sheet for the town of Diamond Valley. Just remembering that 2022 represents essentially Turner Valley plus Black Diamond put together, with some changes made for if they had balances with each other, or transactions with each other, because those would net out. First thing I always like to do when I look at a balance sheet for municipality or someone with the public sector is look at the net financial assets number. The net financial assets number essentially represents your liquidity. So that's the liquidity of the town on December 31st. So if we were to close everything down today, pay off all our debts, collect all our money, how much would you have left? And that's what you see there. So that's 8 million. That's a very healthy balance. That's what you want to see. One thing I will say when it comes to financial positions, obviously, it is a snapshot in time. It'll be different on January 1st. It'll be different on December 3rd. But that is a healthy number, and that's what you want to see. You want to see a large positive number there because the town has the ability to essentially enact potential projects or potential initiatives by council. Then what I like to do is I like to look at any big swings and changes. So the big swings we see here is your cash flow, and I will talk a little bit more on that when we go through your cash flow statement, but essentially you generated positive cash with your operating transactions. We spent some of that on capital assets and we spent some of that paying off our debt. And that's why we have an increase in cash. In terms of receivables, you can see that your taxes and grants in place of taxes receivables increase. So this is essentially just taxes receivable, think of it that way. When we look at this, essentially it's an increase on current taxes. So the arrears have actually stayed consistent year over year with both towns and the town of Baden to amalgamate them, and it's all current taxes. So think of it like, again, balance sheet snapshot in time. It could just be that people didn't pay till January 1st, 2nd, or the 4th. Or potentially next year I might be coming here and saying, okay, no more arrears have gone up. I'm not 100% sure if how that's going to work out, but essentially that increase is all current taxes this year. In terms of trade investments and other receivables, I will talk more when we get to the notes. And then lastly, your investments, we've gone up a little bit, and also that's another reason for the cash increase there. In terms of accounts payable, now that is a big decrease, and I tried to see if there was any specific reason when I looked through it. And to be honest, it's just timing of invoices. There's no one big dog invoice hanging out. It's just timing of invoices. And like I said, balance sheet is a snapshot in time, so just worked out that way. I'm wondering too if this is just me totally randomly guessing, is if because of the amalgamation, maybe anything received late December 2022, we held off on paying just because we didn't know what was going on or didn't want to. I'm not 100%. But I did look to see if there was one specific invoice or one specific vendor causing that, and it's not, it's just straight up. So, in terms of deposit liabilities, there is an increase this year for development deposits that we received. Deferred revenue, we will discuss a little bit more in detail into your notes. Employee benefit obligations represent your vacation overtime. Once again, no specific one employee causing that. It seems like it's just such a good effect. And then lastly, your long-term debt, we continue to. So that is your net financial assets. In terms of your non-financial assets, your capital assets, your inventory. I will talk about capital assets further, different schedule. But essentially inventory, prepaids will stay relatively consistent. Your prepaids will always stay consistent. That's your insurance. That's in components. Any questions on the balance sheet or financials?
Second reason, prepaid expenses have gone up by 40 grand.
I can find out where it's.
Curious. Inflation.
I'm gonna guess inflation because I did look, just like past payable, I usually look to see if there's one or two kind of factors.
Yeah.
Nothing popped up to me. So, let's see. Your insurance is saying mine definitely went up.
Insurance. All three of those.
Everything else is about.
Insurance.
Insurance.
Yeah.
We hear through the grapevine because of fires that we're seeing all around, insurance is gonna go up again for municipalities, so. Should be nice to see what that could. Okay, thanks for the knowledge.
Bro, it's fine.
It's not, it's an amalgamation. It's an amalgamation. It's an amalgamation.
It's not global pressure, it's an amalgamation.
Okay,
Okay, so we can move to
The next one.
the next page.
That's all we care.
Okay, so this is the statement of operations and cumulative surplus. So a couple of things I will touch on this is you'll see that under our budget, we have a note. And essentially that is because when municipalities budget, sometimes we budget things like transfer to reserves or taking money out of reserves, etc. For financial statement purposes, those are not because they don't actually represent a good revenue or an expense. So that note essentially reconciles your budget back to what it actually would have been approved of. And then also secondly, you also have Shrug's budget sticking because the town has 90% of Shrug and Shrug actually gets brought into your financial statements. Okay, so I will just try to do the big highlights here for the revenue. Expenses will go through in detail on a different schedule. I'll just talk about on as well. So when we look at our taxes, we can see they're relatively consistent. So small increase, which I think is true. When I look at your user fees and sales of goods, you can see that they're down. Essentially, we had a lot of sales to both towns that seem to be not necessarily random, but just various side things, such as concession stuff, those seem to be down. And then as well, your utility seems to be low. So that's what's causing that increase there.
The pipeline was here last summer, and a lot of local businesses said there was a lot of increased traffic in terms of spending, so, you know, campgrounds, pools, all that stuff would have generated a lot of money last year for this.
Okay, so then government transfers for operating, we'll see that jumped up significantly. Essentially, the town received a large grant for the amalgamation. And that's pretty much almost the full increase right there. Small increases on the other grants you normally receive, but the amalgamation is essentially jump there. In terms of investment income, interest rates went up, so we benefited there. Unless the cost of tax is relatively consistent with prior year. I will discuss development levies because that looks like a big jump, but it's more of an accounting trend. So municipalities can account for development levies two different ways. You can either account through it through your deferred revenue, so that means you collect the cash. And then you carry it forward in time until whatever the purpose was that you collected the development levy for is spent out. So you don't recognize it as revenue. Or you recognize it as revenue immediately and it goes into your reserves and you track the spending of the reserves. So each town treated it differently. One town did reserves, one town did deferred revenue. So the reserve approach going forward, my opinion, that also is the better approach to go. So what we did was anything that was stuck being carried forward in deferred revenue, we recognized revenue to reserves. So it's a one-time thing. You're gonna see it stabilize with. In terms of finance rental licenses, the big increase is rental income seems to be a lot higher this year. Prior finance was relatively consistent, permits were relatively consistent, licenses. And when I say relatively consistent, obviously I'm comparing two towns to one now, so it's hard to say. It's B going A plus B. Looks like it's still equals C. In terms of franchise concession contracts and other revenue, there was a one-time sale of land for both towns last year that there were around $300,000 each. Looking, so that's what's causing that $1 million in 2022. We did not have those one-time sales this year. We had more consistent revenue, so that's why there's a drop there. And then your gain on disposal, that's just an accounting thing. I'll put that into here. Tangible capital assets section. Talking for too long. I'm not gonna really go into expenses here because I think we have schedules that talk a little bit better further on in the statements. But is there any questions on the revenue?
I have an idea.
Yeah.
And I'm not sure if you were meant to answer this one, but I'm really intrigued by that. The fines, rentals, licenses and permits that increase. You mentioned it likely is on the rentals. Could we get some information, maybe not necessarily tonight, but leading into our budget for next, as to what does that drive? Because we've been talking around the table for revenue sources to see what we can do with that. So it would be nice to have some more detailed info.
Sorry. Okay, any other questions on the revenue side? Okay, vertical is forced to the bottom, is where you see the lines as counted get greater. So as you can see, it looks like we start off with a deficit, but then we add in your revenue from capital, revenue spent on capital. And you can see that we come to a small accounting surplus of $150,000.
That's just the capital.
That's the accounting. So when it comes to municipal statements, I really always try to have that because of the way the accounting standards work, stuff like that, your deficiency up there, that's not a cash deficiency, right? That's an accounting deficiency. And sometimes stuff like amortization, which is not a cash item, is put into there, right? You have gains or losses on sales, which is slightly a cash item, but really your gains and losses, how much cash do we get? Right? Because we might be amortizing an asset at 20 years, and perhaps we actually should have been amortizing in 15 because this particular piece of equipment actually gave us more money than we sold it. So I like to just hammer that home that this is an accounting deficit, then an accounting surplus. This doesn't mean cash. But if we go to the next page, or next two pages, so I'll skip this one because this one's kind of just regurgitating information that we went through. But if we go to the next page, we have our cash. See. So as we can see, our cash from operating transactions, we generated $800,000 in cash. What did we do with that cash? Well, we bought some assets, we repaid our debt, put some money into investments. So that's our net decrease. So if we scroll over for that's our net decrease there for $1 million. But you can see that our operating transactions are actually cash positive. So that means that we're operating in a cash positive, and you can see that's consistent. Now, last year, you can see that we had this huge collection of receivables, that's grants, some selling. But in terms of, like we talk about, well, we look like we had a deficit on operations. I like to think of it from a cash perspective because when it comes to running municipality, cash is good. Any questions on those last couple statements? Okay. We can briefly go to schedule 2. I apologize if this is getting lengthy. Bad signal.
Real good.
Always.
First year amalgamation of.
So, essentially, this is your schedule 2. So this, I know we were talking about the government transfers to capital, so that's how much money went towards paying for these capital assets. We saw the cash out the door, paying for these capital assets on your statement of cash flows. So what did we buy? Well, these are all the different sections that we spent money in. As you can see, we had some assets under construction that were finally completed, and then we sold off some assets as well. So in terms of the additions that we have this year, the major additions that you're going to see, Seclusion Valley, infrastructure work, pool and spray park equipment work. Got some trucks. We've also renovated some buildings, and then we did some work for the skate park and dog park. So that's kind of all those assets there. In terms of what was sold, we sold off some equipment, we sold off some.
So because West End's a commission right now, their upgrades doesn't show here, right? That's
Correct. We'll talk about West End.
Oh, cool. Thank you. I love that news. I was hoping to skip it, but.
Just briefly.
I'm kidding. High level.
Yeah, just briefly. So this essentially summarizes all that. At the bottom, you can see where I talked about cash escapes. So during the year, assets with a net book value of 28,000 were disposed of for proceeds of 314. So like I said, sometimes we advertise assets or depreciate assets maybe quicker than we actually should due to accounting standards, and they might actually hold their value better. So that led us to have a gain on disposal of assets of 286. Any questions on capital assets? Okay. And so I'm not gonna really talk about this. I'm sure we're all well familiar with the property taxes, what we have spending on. A brief overview of the schedules that you outlines, the real property taxes, the property taxes, the government grants that we're receiving, the relief taxes, and then all the different associations they were spending. Okay, government transfers. So if you remember, I talked briefly about the government transfers and how the is essentially affected. Quite a large bit of that. So the change in the provincial government from 184 to 125, almost purely amalgamation. That's amalgamation represents about 90%. Rest is made up of one other small grant that we had for climate resiliency. Then in our other local governments, grants increased for SCSS, and then as well as some other smaller material grants, so an extra 20 or 30 small grants that we received for years. In terms of provincial capital grants, we received money from MSI that was spent on our capital, and we also received money from climate resiliency that was spent on some new developments. So that's there. It was pretty stable last year as well. That is relatively consistent. Questions of government transfers?
Yeah, real quick,
Yeah.
one question there. 2022, that would be the total of both towns together to 1.7.
Correct.
And so 3.6, even though you take 1.2 away from that, that's still a substantial increase on rent and government funding. Question for, that's something that was just bandied back and forth during amalgamation negotiations. Did the amalgamation impact the availability of those grants?
Great question. I don't know. Obviously the 1.2.
Yeah.
That for sure is
Obviously,
the
right.
authorization. In terms of those other local grants, I'd have to probably do them again to receive other grants or receive strictly for amalgamation or potentially at one time for, but I can get that answer.
And if we can have access to those grants on a weekly basis, that's better. That's a good component.
Yeah. Maybe a good side note email. Okay.
Yeah, I don't expect the answer. Great work here.
Right, I have a big red little button.
Yeah.
Okay, we can go to the next. Okay, so I promised that I would talk about expenses, so I'm gonna talk about expenses here because I think this tells you way more about your expenses, because instead of breaking it down by administration, government, water, sewer, we break it down by what we actually spend our money on. So first line, amortization of capital assets, that's depreciation, that's a non-accounting item, I'm not even gonna touch that. Second line, bank charges and interest, small amount, obviously it went up because interest rates went up. That's just the nature of the beast. So contract and general services, we'll see that there's a $300,000 decrease this year. When looking at that, it looks like it's maintenance costs. So it looks like last and in both towns in 2022, maintenance costs were high versus this year were. So to me, that tells me two things. Either the maintenance we did this year qualified as potentially we could capitalize them. So it means we bettered an asset or created a new asset. So instead of stating expenses, they're now stated on our balance sheet. Or perhaps we did less maintenance in 2023 than 2022. I can't tell you which is the actual scenario, but to me, that's the only two scenarios that I can see. That reason, there was nothing else really driving that job except the maintenance that I saw. In terms of interest on long-term debt, your debt continues to go down, therefore your interest continues to go down. Materials, goods and utilities, so it went up, but this looks to me more like inflationary increases. When I look across to see if there's any particular reason, it doesn't seem like there's any particular reason. Everything just seems up slightly, so therefore you have them all low. So that's anything from utilities to products to goods that we purchased. Other expenses represent your bad debts, essentially. There's some other minor expenses in there, but essentially represents your bad debts. So likely in 2022, I know on the Turner Valley side, we combed through receivables and wrote off the legal because it was a big one-time hit in 2022. We're probably going to now return more to a baseline. In terms of salary, wages, and benefits, slight increase there, but nothing really material. I would just assume that that's based on the turnover that might have happened as well as any cost of living increases. Okay. Promised you commission, we'll talk about the commission now. So the large increase to the other local boards and agencies is the money given to the commission to build a lagoon. Yeah. And that makes it about 85% of that increase. The others are other transfers to local boards seem to increase slightly. And my guess is that's just inflationary. The other local boards and agencies probably came, asked for 5-10% more than they would have years prior, just due to inflation. But the big jump, that's the commission, and that's the lagoon. Any questions on that?
Ladies, online, anything, nothing, good?
Actually, I do have just a comment. Because
Okay, go ahead.
this is where the transfer to the commission, it's basically a flow through from the amalgamation grant we got. It was almost $1 million that we flowed through straight to West End. And that really is the biggest, most material item on, change in the financial statements this year. I'm just wondering if there's a way to communicate it. So if you just look at the financial statements, there's no way to know that, the average person reading it, that we amalgamated, we got a huge grant, and we sent it straight over to.
Good.
That's a good question. In terms of how the schedules work, I don't think we could call it on the schedules, but I don't see an issue with maybe creating a note to the financial statements potentially during the year. Council transferred at 1.2 million, whatever it was, to the commission to build.
That would be a good note to have, because next year we're gonna have 20 million showing up on there in assets.
Yeah.
Where did that come from?
Yeah.
So.
Yeah, I have no problem.
That
I'll have to-
important for me.
It won't sound as easy as that, but I have no problem with it.
20 is the upgrade. For existing, right, will sound down. Yeah. Yeah, if you could make a note on that, that'd be great.
Yep.
Yeah, that's.
Oh, we're gonna be communicating.
So we just let me ask you, we charge our prices for taxes to government. It's just for everything, less than we transfer. You bring, whatever you like,
And the debentures.
Notice maybe. Any other questions on this one? I'm gonna go to the next schedule in detail, but essentially it takes what we've talked about and breaks it down by sector. What you're gonna see, kind of how this reporting usually always works is general government's always in a surplus because it collects all the taxes and everything else is in a deficit, but that's because taxes pay for all the diversions. So it looks kind of weird, but that's the way it works. Now, we'll go to, hey, find here. I know we talked about good sleeping material. Financial statements, great sleeping material, especially the accounting policies. We will go to page 17, note 6, please. Okay, so I promised I would describe what makes up your deferred revenue. So monies that have been received for a specific purpose or must be spent on something specific. And if it's not spent, it gets carried forward to the next year. So biggest number in there is your flood erosion recovery control. This has been a large numbers, especially when I was in the sector for a long time. You do have the cash, you have the money. It's just about how you're gonna spend it. So just explain that. Next largest one is your MSI. I think last year there was hesitancy to spend some MSI just with the amalgamation on certain projects. So now we're starting to spend that money. Gas tax, we did not receive any new gas tax money this year. We haven't spent out the ones that we had last year. The climate resilience grant, we've already kind of talked about that. We spent some of that this year. The post amalgamation grant is a separate grant actually from your amalgamation grant. So there's two grants. There's an amalgamation grant and a post amalgamation grant. Post amalgamation grant has $50,000 left in it, and then the rest are all just smaller other grants that are being carried forward. Any questions on the deferred revenue, so monies that are being carried forward?
I was gonna say, can we, is there limits on what we can spend post amalgamation money in? So we was at the rink.
Yeah.
Or.
Your worship, it's,
They might have ideas.
yeah, offset the additional, audit costs, because the first year was, significantly higher than this.
Oh, okay, that's fair. Cam's like, actually.
Well, as long as we spend on something.
Yeah.
I still wanna see it.
Sitting there.
No,
Okay, good. All right, we got
Thanks,
plans.
thanks, man.
We can scroll now to page 19.
Just.
Let's try to fit note 13 all in one page. We can. Okay, perfect. So here are your reserves. So both your operating capital, and then it just takes the balance from the beginning. So beginning balance is a little difficult because both towns didn't exactly have the same reserves, but we were able to work with management to kind of figure out which bucket each reserve should go into for financial statement purposes. Obviously, they have all the details of all the individual, but if we would have done all the individual, this would have been about 3 pages long. So essentially it just shows the net change. So obviously you can see that your capital, we have a net negative change, but it's usually expected, especially in a year where we weren't sure where all the grants were gonna be spent out. And you can see your amalgamation reserve still has a little bit left. But all in all, your reserves increased by 200,000.
Jonathan, you have.
Just point of clarification, and administration may be the ones to answer this. The work that's currently being done on the capital and infrastructure work on, what is that, First Avenue North? Did we not dip into our reserve significantly on that?
That is going to, through the chair, that is going to be in 2024.
Oh, gotcha.
Yeah,
I mean,
yeah.
you're behind. Sorry.
Yeah.
Sorry. A
So,
long day. Sorry about that.
yeah, we are taking that around 1.35, 1,035,000 or
Right.
350,000 from the reserve and rest from the MSI and CCPF.
Right. Thank you for clarifying.
Yeah.
My apologies.
So I'm back here next year, then you'll see a big.
Yeah. Yeah.
Okay, so we can keep going and the last one, I will go, so it's just page 21. Budget notes. Okay, so here's, remember how I discussed how budget that you create doesn't exactly make all of its way into the financial statements, just because we have some stuff like transfer to reserves, payments to reserves, taking out of reserves, and it doesn't really fit the criteria of what we see on a financial statement. So this is just taking that original budget, adjusting it and getting it to what you see with financial statements. You'll see that Shrug actually budgeted for a deficit this year, so that's why there's a small deficit in the budget. So you can see if you look at the town budget will obviously break even, all our adjustments to get it. Just stuff. And I appreciate you listening to me. That is the end of my presentation for the financial statements. I am more than happy to answer any questions you may have.
Hey, ladies online, do you have any questions for Cameron?
No, none here. Everything looks good considering the work you had to do. So thank you very much.
Thank you, Heather. Cindy?
Yeah, no questions, just great job, everyone. That was, yeah, a huge amount of work, so appreciate it.
Excellent, thank you. Jonathan?
You look good. That was well done. Very informative, but I also like how you presented so I can understand. So thank you. No problem.
Brendan?
Yeah, maybe just maybe something for the future. When we would sit through our budget meetings on the Black Diamond side prior to amalgamation, they'd kind of give us a breakdown as to how our reserves fell into place with communities.
Municipalities.
Yeah. How are we looking?
So normally I would do that.
Okay, I know your workload was intense.
Given that this was an off year, I didn't have time to share something like that. I can bring something like that to you next year, I promise.
Perfect. Okay, cool. Yeah, no, that sounds great. I know, and I really appreciate the amount of work. I know that you guys push right to the limit. And Ben, you and your team as well. Thank you for everything. So no, very well done. Look forward to seeing that next year. Appreciate that.
Everything he just said. And some extra kudos to staff because I know that you had to work with them. Some long hours, been has some nightmare stories of cross-referencing data and Excel spreadsheets and duplicate invoices and so on and so forth. So really good work. Thank you for getting it done. I know we had to ask for some extension to get there. But first year of amalgamation was important. We have a detailed document and we definitely are getting what we paid for in this report. So thank you very much for that. You did have some recommendations, I believe 4 recommendations for policy and procedures for staff to implement. So we will look at that as council and definitely get that moving. And other than that, I think you're good. Thank you very much. Adam, did you have anything you wanted to add?
That's it, your worship. Thank you very much.
Excellent. Thank you. All right. I think we have one more thing, and then her name is Veronica Viber, yeah. Where did we? Oh, yes, Jeff.
I can give you that motion that council adopts the 2023 audited financial statements.
Thank you. All in favor?
Hi.
Aye.
Amended. There's changes coming back, is that correct?
We've got 2 emails. One amendment?
For that note.
How's it been?
So as
So as amended, there's Cindy from the amendment?
For the West
Yeah.
End edition? So as amended, council?
I've amended, yeah, I'm in favor, yeah.
Okay, excellent. Yeah, we've got, don't come out.
Take care. Thanks for coming.
Thanks for coming.
Like
You guys.
How these don't.
I think it'll be on the website.
Vernon,
Sorry?
when will we put it on the website?
As soon as we get the amendments back and signed. I'll post it as soon as we can.
An
A
amendment?
note, yeah.
Okay, good, thank you.
Thank you.
Sure. We go. Yeah.
We're good there. Sure. 2 things we've got to do here, so right.
Yes, I can get them there in the morning. I gotta take 5 minutes to step over guys.
So we just want to acknowledge, Jennifer Gloiber's resignation.
It's great working with her. Everybody, of course, sent an email to that effect. We wish her all the best as she goes forward. So she was the deputy mayor, which brings us to a conversation, and we don't have Hazel here.
Why don't we put this?
I was thinking that would be a great idea,
I'll make that.
right? Yeah. Cindy and Heather, we were thinking, we need a deputy mayor for the next 3 months. Hazel would be a good one.
Till our organizational meeting.
Till,
Unless either of you guys want it.
Yeah.
Oh, I don't want it, and I don't think Hazel's had a chance, has she?
Not yet.
she hasn't nothing to speak of.
Yeah, so I think you have to ask Hazel.
She wants it.
Oh, yeah, she'll be
Well,
fine. Sometimes you just gotta jump off the deep end, you know?
That's not
Only 3
fair,
minutes
you
in.
guys.
Oh, I'll
Yeah,
take it back
gotta
easily.
ask her.
Then give it to me.
We'll give it.
I'll take it back.
That's what I'm thinking.
I don't mind that at all, but I think it's not fair to appoint her as deputy mayor. And she has been asked if she wants the job.
She'll be fine. She's asked for it before. Verna?
If for some reason Council Martin does not wish to do this, we just bring it back to another agenda and make another appointment.
Yeah, if she really doesn't want it, then she could just say no, and we could just reappoint at next meeting in September. We're good.
I'm really not sure about this.
She's
Come back
very
to next
considerate,
meeting
not
either
very
way,
concerned.
so.
I good. Jonathan, give me a motion.
Yeah, I'll make the motion that we appoint Councillor Martin as the deputy mayor until our organizational meeting in October. Good. And I'm sure you had something there written already, so my apologies. I motion.
All in favor?
Aye.
You could have voted against, Heather, would have been fun.
Fine.
All right,
I mean, it's okay. I mean, Bruna's great. We can go back if we does no.
oh, yeah. We also have a few, absentee, committee. Yep, so we have some committees that Veronica's on.
Your worship, if I may, you could just wait probably the org meeting for those. A lot of those have coverage already. We're in August.
As long as they got covered, we're good. All right, excellent. Nothing further. Then we are complete. We are adjourned. Thank you.
Thanks, ladies.